Hello everyone, this is Dan Gramza and welcome to Gramza Market Studies for Thursday, June 7th. Greetings from New York. Let's take a look at the Nasdaq market. We had some positive, I wouldn't say concerns, we had some positive things that came out today regarding the market. We can see how the market reacted to that. It's moving up on the premise that Europe and the United States is going to react by providing some economic growth. And that's the expectation, and we can see how the market feels about that. I also told you yesterday that in the advanced video we were discussing how this market moves. Now, this is a step in the right direction. However, we're not out of the woods yet. And the next couple days are still going to be important for us. But it's definitely a step in the right direction. We are looking for unchanged to higher. We are not looking for a big move today to the upside unless something new comes out. In the currencies, we feel the same way about the euro. It is definitely a step in the right direction, has challenges right ahead that it has to get through. The British pound did trade through this buy level. Now, again, these red and green lines, these buy and sell levels, are references from the way that I would approach these markets. I'm not suggesting that you should do this or that you would get this kind of return. But what we're seeing here for the British pound, the difference between the sell level and the buy level here, if we had sold it up here and we're buying it here, the difference would be 650 ticks. That would translate into $4,062.50 would be the dollar magnitude of change between these two lines. Over here, and our friend the Canadian dollar is also firmed up. That difference between the sell level and the buy level there in that market is 60 ticks. Each tick is $10. That would be a $600 move in that market. Now let's move on. Let's take a look at the interest rates. The short end of the curve, 90-day paper, the euro dollar did firm up a bit, but the notes and the bonds are behaving properly. You know, capital flows away from interest rates back to the stock market. That's what we're seeing here. Now, in the metals markets, we're looking for a continuation of the buying that came in here. This silver is absolutely beautiful in terms of how it traded through these highs. We're looking for a rest day in these markets, not another big up day. Crude oil did trade through the buy level that we see here. Now, the difference between the sell level and buy level in crude oil is $18. Now, if you're depending on what contract you're trading, you know, these markets, the way the CME group has done this is they provide different types of contracts depending on the person. There's micro contracts in, for example, in the currencies or in the metals markets. And the micro contract is 1/10 the value of the full-size contract. In crude oil, there is a mini contract. So for each dollar move in the mini, that dollar move would be $400. A dollar move in the full-size contract would be $1,000. So in the full-size contract, or let's say the mini contract, the change between the sell level and the buy level here would be $18 or $7,200. So $7,200 a contract. The full-size contract, the difference here would be $18,000. That's what you'd see from the sell level down to this buy level. And again, it's just an example. It's a reference to give you an idea of how that could be managed or what the result would have been here. And again, it may not be right for you. But let's take a look at the grains, and that's our last market. The grains, we're looking for a rest day today. Again, I think they're behaving properly. Right now, we're looking for buying to still come into this market. Well, that concludes today's market studies. Thank you for joining me. Look forward to being with you again, and in the meantime, take care.